Yeah, I mean, the fact that it's underperformed, gold has been trading to equivalent to chopping way up near highs, near previous highs. We've seen this divergence, as you just said. And so if the market goes into recession, the dollar rallies, we're going to see gold sell down as well, which means if these are already going down when gold is actually going sideways, when gold falls, these are probably going to pick up speed even more. Typically, the ones that are underperforming are the ones that are going to drop even faster when real selling pressure actually hits. So I think there's going to be an amazing opportunity once everything is flushed out. If we do get this major correction potentially next year.
Gold prices are hovering around session lows after activity in the U.S. service sector saw a moderate pullback in September, according to the latest data from the Institute for Supply Management, ISM. ChrisVermeulen, chief market strategist at thetechnicaltraders.com, anticipates a promising investment opportunity after a potential market correction next year. He highlights gold stability during uncertain times, outshining mining stocks and silver. Shares of precious metal miners and related exchange-traded funds had already posted significant losses amid a drop in gold prices over the past 2 consecutive months. Gold prices eased on Tuesday after rising nearly 2% in the previous session as investors cautiously turned back to riskier assets and looked forward to further cues on the U.S. central bank's policy stance. Meanwhile, Chris highlights the unpredictable nature of trading precious metals, driven by factors like the stock market, the U.S. dollar, and interest rates. The perceived haven status of the precious metal helped to underpin, but it has also seen the tailwinds of a weaker U.S. dollar with Treasury yields reversing the gains seen last week. Regarding uranium stocks, Chris believes in their significant potential, driven by their versatile nature. The base case, as proposed by the broker, suggests that total nuclear capacity could grow at a rate of 3.6% by 2030 and 3.25% by 2035. This equates to a 30% annual increase in uranium demand through 2030 and 24% through 2035. Now, we are presenting the clips of ChrisVermeulen's insights from his recent video with David Lin. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Precious metals and mining stocks have a really weird relationship. Sometimes they move with the stock market. Other times they'll do the exact opposite. Stocks fall, gold miners go up. And then you got to throw into the mix kind of the US dollar, which, when this most recent move, I think with the interest rates, you look at this sharp drop in gold, miners, and silver, and then we just look at it quickly to the US dollar. It has been this strong leg. It's almost been a mirrored move in opposite directions. So, when you look at the miners, they are the speculative play when it comes to precious metals. Gold's holding up because it's the global kind of physical reserve currency that people see. Gold moves slower, so people can put more money to it and be comfortable. Where silver and miners move super fast, you wouldn't want to just go dump like $1 million into it and lose 8% in one day. You go to gold and it'll move 0.5%, something that's palatable, that has a little more controlled of a commodity. So these speculative moves, when people are nervous, they move away from miners, they move away from silver more so than gold. And because these are dropping faster, people might actually want to hold gold more so just because it's holding up better. So it's the precious metal space is difficult to trade because it flips and flops between moving with stocks, moving the opposite of stocks. And then we have the dollar involved in interest rates, and all these things just make it a very difficult scenario. A lot of people, so many people love precious metals and miners, and I do as well. There will be a time when they're going to be absolutely amazing. Hopefully sometimes next year we see a major rally in this space, but they're very difficult to trade unless we're in like a really strong bull market phase. You have to be very aggressive. You have to be very short-term trader because every pop is followed usually by a big drop. So they're a tough beast, and people trade them thinking they should be easier and they like them, but it is actually a very tough, I find, sector to trade. I think there's going to be an amazing opportunity once everything is flushed out. If we do get this major correction potentially next year, and I think miners and metals will be very fairly valued, along with stocks as well. But I think they're going to have a huge move going forward. And I think uranium stocks are also going to have massive potential. simply because of a climate change. There's so many ways that uranium can be used with these small little facilities that can, produce so much energy in a very controlled, low risk way. I think uranium is going to come back online, and these little modular systems are going to start powering states. The dollar typically does well when there's fear. I think the dollar is going to have a little bit of a pullback, but overall, I think the US dollar index is going to continue to rally fairly significantly. In terms of another asset, if the markets are going to have a big correction, I don't really want to hold a whole lot of stocks. Really, I have to follow the trend. Right now, the trend is down for stocks in the short term. So to me, the dollar is kind of the one that's trending up very strong. You can be in another type of position, which isn't all that exciting, but bill, which is the treasury note, which you can just kind of collect monthly interest and dividend payments until there is a decisive move. Right now, the markets are oversold. And I think trying to short a market here is a high risk play. I think trying to pick a bottom or trying to play a bounce is also high risk. So the dollar and the sidelines right now until we get a new decisive move in a direction here is kind of what I'm looking at.
ChrisVermeulen predicts a market reset similar to the year 2000 and believes the U.S. dollar will strengthen during market distress. Dollar positioning in futures markets showed a net long of $3.07 billion for the week ended September 26th, according to data from the Commodity Futures Trading Commission. That was a sharp reversal from a short position of $21.28 billion earlier this year. Furthermore, Chris discusses the resurgence of uranium stocks, which have risen about 41% after being out of favor for some time. This week, uranium prices extended last month's breakout to multi-year highs, with December-dated futures, UXZ23, topping the $72 per pound mark. Uranium-related stocks hit new highs of their own in late September, despite widespread weakness in broader markets, but in more recent sessions, these stocks have been pulling back from recent highs. UEC, Uranium Energy Corporation, is up 26% in 2023 and has more than tripled in the last 5 years. Just last week, the stock tagged a new 52-week high of $5.77. Let's get back to the interview.
We saw the same thing back in the 2000 tech bubble. The dollar screamed higher. I think we're actually much more closer to a 2000 kind of market reset that could take a long time to unfold. And I think the dollar is going to go back up and hit what we saw back in 2000, which is around the 120 mark. But typically we see when there's blood in the streets, there's huge panic. The dollar is the one that really goes up in value, and stocks and everything else plummet. So to me, a very strong play during a recession is actually the dollar. That it's just played out very well in the past. Even on short-term charts, the stock market sells off really big. The dollar tends to go up. So it's just kind of the way that I've found that the dollar seems to move. And I really like it because it's a fairly consistent moving asset class. It's not really volatile. So a big day in it is like 0.5%, 0.75%. So it is a very controlled way to kind of manage your money and take advantage of weak times. If we take a look at uranium stocks, we've seen from the lows here, we've seen they're up about 41%. And it's funny because uranium stocks, as you might have quickly saw a glance there, if we go way back in time, they used to be valued very high. They have been out of favor for a very long time, and they're just starting to come back to life now. And that's a lot of it has to do with uranium not being needed as much, people not wanting to deal with it because people have this belief that it's a very dangerous and dirty energy. You could argue both, but I think it is a relatively safe way to generate a lot of power in the long run. But this so-called dirty, scary energy is rallied 41%. And when we look at, for example, TAN, which is solar, which is supposedly clean energy, and we look over the exact same time frame, it is down, almost 50%. So it's really interesting how two kind of extremes are kind of moving. And I don't know, somebody would probably argue that uranium might actually be a clean energy. I've heard cases for both sides, but it's just a very big, different move between these two extremes of kind of energy production, which I thought was really interesting. And the whole solar space was on fire after the COVID crash, and now it's fizzling right back out. I think a lot of these stocks have got a lot of room to still fall. In fact, if we take a look at the ARK-K ETF, you can see here it was one of the most popular ETFs. I swear everybody piled into it and it's all they wanted to own. And even though the stock market is like equivalent to trading right here, right now, anybody holding these growth stocks are down, from the highs 76%. And what we've been seeing is a lot of this rally that we've seen in the stock market this year. A lot of stocks are floundering. They're refusing to rally back up. There's not a lot of participation. Saw this just the other day. We saw the stock markets close had a somewhat positive day, but almost every sector was down. And it was just a couple of tech companies holding the entire index up, masking this kind of false belief that, the markets are doing okay. They're holding up. But the reality is most people's portfolios are plummeting while the stock market is up trading near the highs, and people find it very frustrating, but they don't understand how the markets move. And if you hold specific types of sectors or stocks during different stages of the market, you're going to dramatically underperform.
Observing the fluctuations in precious metals and mining stocks and the resilience of the US dollar offers valuable insights for potential investors. The relationship between precious metals and the US dollar offers both stability and uncertainty, providing opportunities for strategic navigation in this intricate financial system. How do you foresee the future of precious metals, and what factors influence your investment choices? What are your thoughts on the current economic uncertainties? Share your thoughts in the comment section below. If you find this video informative, don't forget to show your support towards our channel and turn on notifications to stay informed about our latest videos. See you in the next video.